Hello guys, welcome to my YouTube channel. In today's video, we are going to talk about market structure. We're going to talk about how the market behaves, how the market moves. So what is market structure? Market structure can be defined as the behavior of the market. Yes, how the market moves or how the market behaves. Market moves in a zigzag motion, going up and down, going up and down. It goes up, it comes down, it goes sideways. So we're going to talk about this movement. So um, since we said that market structure is the behavior of the market, so market behave in three major ways. Now let me illustrate them using this drawing. Market goes up in a form we call the bullish market. The bullish market or the uptrend goes up, comes down, break of structure to the upper side, creating a new high, comes down again, creating a new low, then breaks the new high, but we call it a break of structure, coming to again down, forming a new low. We go again, another break of structure to the upper side. Now, look at, just take note of this. The uptrend or a bullish market consists of higher highs and higher lows. Higher highs, HH, I can write like HH, and higher lows, higher lows, HL. I can write it like HL. Uptrend consists of higher highs and higher lows. How do they form? When a market is at this high, it comes down, have this low. This low is higher than this previous low, then moves up, breaking this high, causing what we call a break of structure to the upper side, breaking this level, then we can label it a break of structure. You can say BOS, break of structure to this side, to the upper side, then comes down to another low. It didn't break this low, forming a new high, a new low higher than this previous low. Then going up again, it breaks another high, making it a new high, forming a new high. We call this another break of structure, coming down, forming a new higher low that is higher than this one. Going up again, it breaks this already existing high, forming a new high, and we call it a what? A break of structure to the upside. So this is how the market trend upwards. This is what we call an uptrend market or a bullish market. Then the market moves in another form we call the bearish market or the downtrend market. The downtrend market looks like this, going down, forming a new higher low, lower high, sorry, then break of structure to the downside, a new lower low, goes up, creates a new lower high, then break of structure to the downside, new lower high, break of structure to the downside. This is how the um downtrend market looks like. We can call it a downtrend market or a bearish market. Let me label it so you can take note of it. Take note that lower low. Uptrend consists of higher highs and higher lows, while downtrend consists of lower lows and lower high. I'm going to explain. Yes. So lower high. This is a lower low, the lowest point that is lower than this one. Then here is a lower high. This high is lower than this high. Then a break of structure um, to the downside, creating a new low that is lower than this low. We can call it a lower low. Then the market pulls up, creating a new high that is lower than this high. We call it a lower high. Going down again, creating a new lower low. And each one each level that it breaks, we call it a break of structure. That is the proper characteristics of a good trend. It either breaks structure upwards or downwards. So in a downtrend, note that the market is trending downwards, creating new lower lows and new lower highs. Then in uptrend, market is trending upside, breaking the structure to the upside, creating a new higher highs and new higher lows. Then lastly, we have another market structure, the indecision market or the ranging market or the consolidation market. Like this, it doesn't move any direction, it just goes sideways with equal highs and equal lows. There is no break of structure to the downside or to the upside. It just goes just like that. Just like that. Equal highs, equal lows, equal highs, equal lows, equal high, equal lows. Let me label it. Here is an equal high, equal, equal highs, equal lows, equal high, equal lows, so on and so forth. Equal high, equal lows. This is a consolidation or ranging market. This in this market, the market maker doesn't have any direction yet. They are still in an indecision mode. They don't know if the market if they are pushing the price upwards or if they are pushing the price downwards. So my advice is whenever you see such thing in this kind of market, you avoid this kind of trend. So let's do a quick recap. We said that there are three types of market structure. We have an uptrend market that goes like this. Let me use the arrow show you properly. Uptrend market trends upwards. That's an uptrend. Then you can say it consists of higher highs and higher lows, and there is always a break of structure to the upper side, then a reversal, a break of structure to the other side, breaking the previous high, forming a new high, coming down again, breaking coming down, then push up again, break of structure to the upper side, forming a new high. Then in downtrend, it goes down like this, goes down like this, forming series of higher lows, sorry, lower highs and lower lows. Here is a lower low, then there is it went up, create a high that is lower than the previous high, breaking the structure down, that is BOS, breaking the structure downside, creating a new lower low, a low that is a low that is lower than the previous low, then going up, creating a new high, a high that is lower than the previous high, then coming down again, another break of structure to this downside. You can see another break of structure to this downside. You can clone it. Another break of structure to this downside, then creating a new low and a new lower low and a new lower high. So this is how the downtrend market moves. Then we can see lastly the indecision market or the ranging market. It goes sideways. There is no direction. It creates equal highs and equal lows, equal high, equal lows. There is no break of structure to the upside or to the downside. Now let me show you the how these market structure looks in the market. First, I'm going to show you on uptrend market. This is a GBP USD in 4 hours time frame. Um, so I'm going to show you how an uptrend market looks like in the real life. Now using this tool, I want to draw the uptrend. I tell you that uptrend consists of a higher high and higher lows and a break of structure to the upper side, that is um breaking the previous high, creating a new high and creating a new low, breaking the previous high, that is the break of structure to a new high, then an higher low, down to a new higher high, a higher low, higher high, and in each one there is what, a break of structure. So this is an example of this is an example of an uptrend. So an uptrend must consist and break of structure to the upper side. You can call it an uptrend. Remember, an uptrend consists of higher highs and higher lows. An uptrend consists of higher highs and higher lows. And there must be a change of character, a break of structure, that is BOS, to the upper side, the higher side, before you can call it the higher high, before you can call it a valid uptrend. Um, Another example of market structure, this is an example of downtrend, how it looks like on a chart. This is XAUUSD. XAUUSD is gold. I see gold spot slash USD dollar. Then this how a downtrend looks on a chart. This is a high low, a lower low, sorry, a lower high, a lower low, lower high, and a break of structure to the downside, lower low, then a lower high, a lower low, lower high, and lower low. Remember, for a sculpture to be valid, there must be a break of a sculpture. So this is a downtrend. For you to call this a downtrend, there must be a break of sculpture to the downside. Now there was a break of sculpture here. Let me take off this thing. Right. There was a break of sculpture here, down to this side, forming a new lower low, then went up, formed a new higher low here, then there was a break of structure again. Market broke this low here, causing it a break of structure, forming a new lower low, going up, turning a new lower high. Then there was another break of structure here. This lower high broke this lower low, make it forming a new lower low. So this is how the market trends downwards. We call this a bearish market. There will be a break of structure to the downside, forming a new lower low and the lower highs. The last market structure, which is the ranging market. This is a USD Aussie USD JPY, the 4 hours time frame. This is how the consolidation market looks like. This is an equal high, equal low, equal high. Then there is a breakout to the upper side. So when the market is in this kind of direction, this box like this, you see that it doesn't have particular any kind of movement. See, before there's a break of structure to the upside. But when the market is still ranging like this, I advise you stay away from the market because you don't know if you should buy, the market will go against you, or if you sell, the market will go against you. So I've shown you the three major market structures. The first one is the uptrend, and the second one is the downtrend, which is the bearish market, and the lastly is the ranging consolidation market. So, for an uptrend to be called a bullish market or a valid uptrend, there must be a break of structure to the upside, breaking previous higher highs, creating a new higher high. Then for a downtrend to be called a downtrend or to be a valid downtrend, there must be a break of structure to the downside, breaking the previous lower low and creating a new lower low. Then for a ranging market, it must be going sideways, equal highs, equal lows. Like you don't even know the movement. You can't even understand the movement of the market. Sometimes it show you higher high, sometimes it show you lower low, sometimes it show you lower high. Like you don't understand, you can't predict the next move of a ranging market. And also remember that an uptrend consists of higher highs and higher lows, while a downtrend consists of lower lows and lower highs. Now we have come to the end of this lesson. If you have any question, you can drop it on the comment section. And don't forget to like and subscribe, and also share to your friends so that they can benefit from this lesson. Thanks for watching.